Welcome to the deep dive. Today, you, the learner, have given us a really interesting set of materials on Waaree Renewable Technologies.
Yeah, they're a big name in India's solar scene, right?
Exactly. And we've got their investor presentation, a Q&A doc, earnings call highlights, official filings, quite a bit to chew on.
So the goal is to make sense of it all, especially their last financial year, FY25, and the final quarter.
That's the plan. Cut through the jargon, find the key insights about their growth, their strategy, what the leadership's focused on.
Okay. We've got the company's own view from the presentation, some probing questions in the Q&A, the management's voice in the earnings call.
Have the hard facts in the filings. Leadership changes, too, I notice.
So for you, the learner, we'll pull out the aha moments, ready to dive in.
Let's do it. First up, the headline numbers. Financial performance. What jumps out?
Well, the revenue growth is pretty staggering, actually. For the full year, FY25, they hit 1,597.75 crores.
Okay, and how does that compare?
That's an 82.29% increase from the year before. Huge jump. Significantly more than, the overall Indian solar sector's growth.
Wow, 82%, so they're really grabbing market share or something.
Seems like it. They're definitely outpacing the market.
And did that continue right to the end of the year, Q4?
Yeah, Q4 FY25 revenue was 476.58 crores. Still a very strong increase, 74.37% compared to Q4 the previous year.
It's a strong finish.
Yeah.
It wasn't just a good start then.
Definitely not. And it's not just top-line revenue either. Profitability looks solid.
Okay, tell me about that. EBITDA.
Pat. Right. So FY25 EBITDA, that's operating profit, basically grew over 50% to 310.90 crores.
50% growth in operating profit.
Nice. And profit after tax, PAT, that was up nearly 58% to 228.92 crores.
Those are really substantial increases. Q4 profits look good, too.
Yep. Q4 EBITDA was 126.33 crores, and PAT was 93.77 crores. Both way up compared to Q4 FY24.
Interesting. What about margins? Did they improve?
That's actually a key point. The overall EBITDA margin for FY25 was 19.46%. Pretty healthy. But in Q4 alone, it spiked to 26.51%.
Whoa, 26%. Any indication why? Better efficiency? More profitable projects, maybe?
Could be either or both. The earnings call might have hinted at project mix, but definitely a strong margin performance in that last quarter.
Okay, so strong numbers for Waaree. But let's put this in context. The Indian solar market itself is booming, right?
Absolutely booming. India's total power capacity hit 483 GW in FY25. And renewables, that's now 220 GW of that, up quite a bit from the year before.
And solar is a big chunk of that renewable portion.
The very big chunk. Solar hit 105.65 GW installed capacity.
And the pace of adding new solar is picking up, too.
Massively. India added almost 24 GW of solar in FY25. That's way up from about 15 GW the year before. Mostly the big ground-mounted projects.
Right, and the government's pushing this hard.
Oh, yeah. The target is 500 GW of renewables by 2030. Solar is expected to be like 280 GW of that.
280 GW, so they need to add, 40 or 50 GW of solar every year to hit that.
Exactly. It's a huge acceleration needed.
And government schemes are helping drive this, like for farmers, rooftops.
Definitely. Things like PMKS for agriculture, the rooftop solar initiatives, they're all feeding into this growth. And companies like Waaree are clearly riding that wave.
Okay, so strong performance in a strong market. But looking ahead, what gives us confidence this can continue for Waaree? Order book.
That's the key indicator, yeah. End of FY25, their unexecuted order book was 3.2 gigawatt peak, or GW.
3.2 GW, and that's mainly their EPC work, right? Engineering, procurement, construction.
Correct. That 3.2 GWP is for Waaree Renewable Technologies EPC side. They expect to get that done in the next 12 to 15 months.
Okay. And you mentioned the wider group has a much bigger order book, including panels.
Right. The Waaree group level, including manufacturing, is much larger, something like 26.5 GW. But for this specific company, it's the 3.2 GWT EPC figure that's relevant for their direct execution pipeline.
Got it. And are they actively bidding for more work beyond that 3.2 GWP?
Oh, very actively. The materials mention a bidding pipeline of around 30 GWP.
30 gigawatts, that's huge potential.
It really is. It signals strong potential for future contracts. Management sounded quite confident on the earnings call about winning a good chunk of that, citing their experience.
Okay, let's switch gears slightly. Operations. How do they manage cash flow on these big projects? Working capital.
Yeah, the Q&A doc had some detail on this. It's a staged payment process.
Staged? How so?
They typically get maybe 10–15% up front when the contract's signed. Then the bulk, maybe 65–70%, comes when they supply the materials.
Okay,
And importantly, that material supply payment is often secured, like with bank guarantees, helps manage risk.
right. And the rest?
The final 20–25% comes through milestone payments as the project progresses. They aim to get the full amount within, say, 60 to 90 days of dispatching materials.
But maybe longer for really big projects.
Exactly. They mentioned on the call, I think, that for larger multi-month projects, the full cycle might stretch out a bit more, maybe 3 to 5 months for the receivables.
Okay, that sounds pretty standard for large construction, I guess. You mentioned the 3.2 GW order book is mostly EPC. Are those projects profitable for them?
They seem to consider the margins quite healthy. Around 15% was mentioned as typical for EPC.
15%.
But they also hinted it could be higher sometimes, like if the project scope is bigger, maybe includes getting the land, sorting out the grid connection, that kind of thing, which apparently happens more with PSU tenders.
Right, more scope, potentially more margin.
Yeah.
Makes sense. What about battery storage? BESS. That's a hot topic. Is Waaree involved?
They are, and what's really interesting is how the costs have dropped.
Yeah. How much?
Well, a standalone large solar project, no storage, is maybe a 3.5 crore per megawatt now.
Okay.
Add battery storage, and you're looking at maybe 6 to 8 crore per megawatt, depends on how much storage, for how long, etc. But it's become much more viable.
Waaree's doing these solar plus storage projects.
Yes, and also retrofitting storage onto existing power projects. It's a key growth area, especially as India adds more intermittent renewables like solar to the grid. Storage helps smooth things out.
Makes sense. Is the grid itself, the transmission network, keeping up with all this new generation? Any worries there?
When Reese seemed pretty optimistic, actually. They feel the network is scaling up with government and private investment.
Okay.
And they also made the point that BESS, the battery storage, can actually help. It optimizes the use of existing lines, potentially reducing the need for quite so many new lines everywhere immediately.
Interesting point. Okay, shifting again. Filings mentioned some leadership changes.
Yes, back in mid-April 2025, there was a board meeting with a few key moves.
What were they?
Mr. Sudhir Arya came in as an additional non-executive independent director. Seems he has a background in project finance, worked at NTPC Suzlon.
Okay, relevant experience.
Then a new CFO, Mr. Manmohan Sharma, again, lots of power sector experience.
CFO, okay.
And Mr. Sunil Rathi, who was non-executive, his role changed to executive director.
So, more hands-on involvement there, perhaps. Any departures?
Yes, Mr. Mitul Mehta resigned as an independent director, cited other commitments.
Right, so some shuffling at the top. Seems like strengthening finance and governance, maybe.
That's how it looks, yeah. Positioning for more growth, you'd assume?
So, bringing it all together, what's the core growth strategy look like for Waaree going forward?
Seems multifaceted. Big focus on growing the EPC side, obviously. Looking at home and abroad for opportunities.
Leveraging their whole setup from panels to storage.
Exactly. That integrated approach. They also mentioned expanding in O&M operations and maintenance. Makes sense. As more solar plants get built, they need looking after.
True. Anything else? R&D funding.
They do have in-house R&D focused on new tech. And financially, they mentioned relying on non-fund-based working capital limits, like those bank guarantees, and no immediate plans to raise more capital. Suggests they feel okay financially for now.
Okay. Now, one thing. You mentioned the great revenue and profit growth. But didn't someone on the earnings call ask about cash flow from operations not quite matching that growth?
Yes, that's a good point. It came up. And it's pretty common in rapidly growing project-based businesses.
Why is that?
Well, you recognize revenue as you hit milestones, right? But the actual cash might lag, especially those final milestone payments on really big, long projects.
So revenue gets booked, but the cash hasn't landed yet.
Exactly. As they take on these huge multi-gigawatt contracts that stretch over time, the cash collection cycle for the final chunk of the payment naturally extends. So there can be a temporary difference between reported profit growth and operating cash flow.
Something to watch then, how they manage those payment cycles on big projects.
Definitely. It's about managing project execution and receivables effectively as they scale up.
Right. Okay, let's try and summarize this for you, the learner. What are the absolute must-know takeaways from this deep dive?
I'd say, first, Waaree had a genuinely impressive FY25. Strong revenue growth, strong profit growth, clearly benefiting from and even outpacing the booming Indian solar market.
Okay, strong performance.
What else? Second, their future looks potentially very bright. They've got a solid 3.2 GW order book to execute, and this massive 30 GWW bidding pipeline suggests serious ambition.
Ambition backed by potential orders. Got it.
Third, strategically they're well-placed. Government policy is supportive, the market needs what they offer, and they're playing across the value chain, importantly including battery storage now.
And the leadership changes.
Yeah, fourth, the recent leadership tweaks suggest they're focusing on bolstering governance and financial management, likely gearing up for continued expansion.
Okay. What were the bits that you found most sort of intriguing or compelling in all this data?
Well, just the rate of growth was striking. That 80% plus revenue jump is huge. Also, the BSS cost discussion, seeing how quickly solar plus storage is becoming economical, that's game-changing.
Yeah, the economics shifting fast.
And that 30 GW bidding pipeline number, it just highlights the sheer scale of opportunity in India's energy transition. Even the nitty-gritty details about the payment cycles, it gives a real feel for the operational side of these massive projects.
True, it paints a picture. So if you, the learner, wanted to dig deeper after this, where might you look?
Definitely keep an eye on their announcements for new contract wins, especially anything significant in BES.
Okay, contract wins.
Also, track their upcoming financial reports for any more color on working capital management, how that cash flow situation evolves as projects progress.
Makes sense.
And, of course, just stay tuned to the broader Indian renewable energy policy landscape and infrastructure build-out. That's the context everything operates in.
Good advice. All right, finally, let's leave you, the learner, with a thought to ponder. India's renewable targets are huge. Companies like Waaree Renewables Technologies are clearly crucial players. So the question is, how will their integrated strategy, combining EPC with newer areas like storage, actually shape India's energy future? And maybe more importantly, what new challenges or maybe unexpected opportunities will pop up for them as they keep growing at this pace?
Good questions. Lots to think about there.
Indeed. That concludes this deep dive. Thanks for joining us.